And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family. It is time for the Market Prep, Wednesday, March 1st. My name's John Hoagland. Thanks for trusting me with your time. March 1st always means that we've survived winter to me. It's also the month that I got married. Somebody remind me of when my anniversary is. As always this morning, our focus is seeking accurate context in these markets, looking for good risk management levels, and always remaining patient. If you're already in the markets, hopefully you've got things going your way. We see that the equities have struggled to hold a higher opening. They're currently lower right now. It's going to be another interesting and challenging trading day. We're going to check these charts here very shortly. Mortgage rates continue to move higher, up to 6.71% from last week, 6.62%. 8:45 Central this morning. We're looking for the ISM Manufacturing Index and construction spending. 8:45 actually before that. 8:45 PMI Manufacturing Final. 9 o'clock Central. ISM Manufacturing Index, probably the most impactful number for us today, as well as construction spending. And at 9:30, of course, the EIA Petroleum Status Report. You may have noticed a little bit of a change in the marketplace here just after 7 o'clock. 7 o'clock Central, some German CPI numbers came out, and they came out a little hotter than expected. Is that going to affect our markets? Is it going to affect our CPI numbers? Who knows, but it seems the market had a reaction to those German numbers here this morning, and right at 7 o'clock, we were holding higher. Now we are holding lower. So stock index is now set to open steady to lower, still leaving February's low alone, at least for the time being. I'm really concerned if we begin to accept down below that. And of course, as we always say here on the Market Prep, ACH, anything can happen. We've got some earnings as the earnings season kind of winds to an end here. Lows with some mixed numbers this morning. Dollar Tree positive on both this morning. Salesforce due out after the close. Nothing too huge or impactful. And again, we are winding up earnings season. Apparently, the Fed's Kashkari speaks early today. I think he's speaking at about 8 o'clock this morning. I don't see any other talking Feds on the calendar. Doesn't mean they're not there. We've got the API last night at 3:30 announced a 6.2 million barrel boost in crude oil. Crude currently to the downside here, about 60 cents. We're waiting for the EIA. The expectation for the EIA is a meager 0.45 million barrel boost, or 450,000 barrel boost in crude oil. So we'll be watching that, of course, especially as crude oil traders will be. The VIX down slightly this morning, 2038. The dollar index also down slightly a little bit this morning, 104.25. Neither of them too far off of where they were at this point yesterday. And the yield on the 10-year just about steady as it was here yesterday, 3.95%. Yesterday, 3.96%. So no major changes in any of those. And as always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Today we have group coaching at 12:30. I just put in the link to register. If you have not registered or have not attended, it's there for you 2 days a week. Today is the day, 12:30 Central, for group coaching. And then after that, It's Make Hogue Money, the little afternoon session. So we'll look forward to seeing you all for Make Hogue Money as well. See if you guys can make me some money. Yes, the Rooster, the February low. Fred is saying the February low could be tested today, right? It's gonna be an interesting one. I was really hoping we could just leave that alone and continue the move to the upside, but again, anything can happen and usually will. Good morning, Fred. Good morning, my brother Rick. I love you. Fred's been watching corn and gold lately. Maybe we'll have to start watching some of these grains here on the market or the market prep and the market reflection. We'll take a look at see what we see in some of those moving forward. Les, good morning, Rooster. Good morning, Timothy. Mark Scott saw, and he conquered. Brian, good morning, Jules Shaw. Happy hump day to you as well. Dan Trader, good morning. Jerry is awake, and I hope John is too. Orion, good morning. Good morning, Bill Phillips. Ainsley, good to see you. Don Clemens, bacon. I thought you were actually speaking for Lacey because she is a big fan of bacon. But then again, who isn't, right, Don? Stephen, good morning from Atlanta. John, good morning. Sarah Hall, prayers and love to you. JM, Anissa, good morning. Mia, Terry King, Keith, good morning, sir. Good to see you. Jason, good to see you. Jason, another Jason, Bartles, and Lewis. Khalid, Travis, good to see you this morning, Travis. Trading Research, Andy. Will, good to see you. Shy T, TLC Trader, good morning. Thank you for popping in and saying good morning. I don't know that I've seen that chat name before. We're glad you're here. Looking forward to your success. Rooster has a buy order at the Feb low since last night. Brackets on, so small risk trade. Absolutely. Good morning, NASDAQ. Joe, it's good to have you back with us again this morning. Hope you're feeling well. We got stocks COVID-19. Good morning. Keep my orders there. I like I love cheap trades too, right? HPAC support, good morning. Lemuel, good morning. Alex, Daryl, Sigma, Zerain. A couple of new names there. Thank you so much for joining us and for popping in and saying good morning. I'm going to try and make this all worth your time, of course. Barry Brooks, good day. Rusty Golfer, my spirit animal. So we're going to jump into the charts relatively quickly. We know it's group coaching today. We know it's the late session of Make Hogue Money. You never know when we might get a special guest in any of those. So why don't we jump into the charts here? We're going to see what's going on in the S&Ps here early in the session. Some interesting things to be looking at here. Pete, Brian, good to see you. Let's jump in. Let's have a look-see, shall we? Let's have a peruse through the charts this morning. So, new month. Here is the monthly chart we've been watching. October, November, December, January, February. This February low, critical, far as I can see. Really, if I'm looking for the market to continue a move to the upside, I do not want it to accept, excuse me, below the February low. All right, let's get on with this then. Here's the daily. 4 or 5 days of balance. We're testing into this excess that we left last Friday that we've been kind of leaning on. If we're looking for longs haven't been very successful for the better part of this week so far. Pretty decent upside move yesterday that just fell apart late in the day. Open interest, we added 5,500 on that roundabout day yesterday. Looking at the continuation chart here, this is the continuation chart. I gotta get everything to kind of lock into its normal place here. So we still have the 50 session above the 200 session. That's the Golden Cross, as they call it, whatever. And now we've got the 100 session and the 200 session at the same spot, below price. So there's still a hint of positivity in this market. Back to the regular daily. Gotta get everything where it's supposed to be. The March daily, we still have the 100 session below the 200 session, but again, the 50 session above that 200 session, possibly friendly. Take a look at the 30-minute chart now. So yesterday, we opened. We didn't really have too much as far as inventory is concerned. We put in a low. We couldn't get to the overnight low. Got another look down below it, and that was pretty much a cheap trade, and we know we love those cheap trades, right? So this was really one of the best trade locations of the day until, well, we moved up, couldn't take out the high of the overnight session, and that's when things started to fall apart. We actually do have a late spike here, and now we're going to be opening below the base of the late spike and below the late spike overall. So this is indicative of acceptance of lower pricing. This is that February low. Last Friday's low was the low of February. Danger, Will Robinson. Danger. We're putting in lower highs. We're putting in lower lows. Seems that we may be thinking that we're going to be heading possibly a little bit lower here. I mean, this market is heading that way. We're going to be opening with a gap below a late spike. What is a late spike? Take a look at the TPO chart here. This is yesterday's chart, okay? IB, neither extreme, lower extreme until the final minutes of the day. The market drove away from the area of balance, leaving no time for showing acceptance of price below that. Now, settlement was 39.75.50. That's not in the late spike, but the market really kind of finished the day down here. So we're going to be looking at this as a late spike. So we've spent most of the overnight above that level, above the base of that late spike, which is, by the way, 39.74.75. Well, it's kind of a moot point now. It looks like we're going to be opening below it and with a gap. Spike rules. If we open below a late spike to the downside, the market is telling us it's accepting of pricing at lower levels. There's a higher probability that continuation to the downside is likely. If we open in the late spike, that's a smaller acceptance of lower pricing, but opening above the late spike to the downside would mark rejection. Obviously, we're marking acceptance over time. So we're going to be looking possibly for opportunities to sell this market and see if we can get that test down to that February low, which could give us a decent opportunity, right? Here's back to the 30-minute chart. There's that low. We got a point of control here that we're probably going to be checking during regular trading hours, and that's really it for weaker structure to the downside. We'd have to go pretty far back to find that. So gap rules, spike rules, looking like this market is primed for continuation to the downside. Now, the one thing that there's a caveat to that, we have to find new business below the February low. If we get down there and we don't bring in new business, then we may put in a low here, and we may find that that this level is rejected. Although, that would be a pretty stiff rejection if that were the case, because what we're seeing above in the TPO charts is unfinished upside auction, unfinished upside auction, unfinished upside auction. So it's looking more like this is shorter time frame speculators pushing price lower, not the investment type or the funds. So if we can't bring in new business below February's low and we reject it, that could also bring buyers back into the market. If we're too short in shorter time frame speculation and speculators and we don't see new business come in down there, then it's a reversal could certainly come into play. Nobody, of course, knows for sure. Let's take a look at the NASDAQ because it's similar but different, right? The February low, okay, Friday, that's very similar. We did not take out last week's weekly kickoff low. It's still here in the NASDAQ, where we had to extend below because we took out the weekly kickoff low in the S&Ps. We added 4,500 contracts in the NASDAQ. That's the estimate, which is quite a lot in the NASDAQ. Take a look at the continuation chart. This is the 200 session. Here's the 50. We don't have a golden cross here. Matter of fact, what we're kind of seeing here is a potential head and shoulders. So if that's the case, and we accept below February's low, which we're going to be kind of looking at as our neckline, a move below that could take us all the way back down to this level. And just a measured move could take us all the way back down here. So that's how critical I believe that February low is. Look where the 200 session moving average is. It's right there. We'd be very interested to see how this market responds there. What don't we have in the NASDAQ that we had in the S&Ps? We don't have a late spike. The market did not extend below the current range seeking acceptance. Look where we are. Looks like we may not open with a gap in the NASDAQ. This could be critical for all of the equities. Watch the NASDAQ today. The NASDAQ may tip off a decent opportunity in the Dow or in the S&Ps today. The NASDAQ may be a bit of a leader. Here's the crude oil. Long time frame range bound activity remains. Short time frame levels are likely to be respected. Look at yesterday. We traded to the previous week's high. Last night we traded to the previous week's high. Short time frame levels are being respected. The API boost kicked price a little bit to the downside here so far. Last night and today, we had 1,000 contract increase in open interest yesterday, which I'm viewing as relatively inert as we are centrally located between weekly kickoff high and low. We are relatively central between last week's high and low. Take a look at the 30-minute chart here. All right. April. Here's the 30. Overnight inventory holding some shorts. We've opened with a gap. We kind of discussed, well, not necessarily in crude oil. There's a visual that we traded up to yesterday in this point of control. We've got a gap left here. We've got a point of control right through it. We've tested to this naked point of control here. We've now closed this gap possibly in extended trading hours, not regular trading hours. We're going to have to close the gap all the way up to here. Overnight inventory a little bit short. Even though we're out of balance from yesterday, I think we talked about this on the reflection yesterday. If we were to open between these 2 points of control, these are going to be the extremes I'm going to focus on for opportunities today. We haven't really reached either of them. We're right in the middle of them. What I think is happening is repair. We're going to repair this gap. We're going to trade up to the point of control here, and we're going to trade down to this point of control here. So we're right in the middle of this. I'm going to try and stay patient. I don't see that there's any grand opportunities here, just the way things are looking here in crude. Here's the TPO chart. We've got week high, a week low, week low. We're in the middle here. Point of control to point of control is what I'm looking for this market to accomplish today. Overnight high, pretty close to yesterday's high. Overnight low, not, the day before's high. Not looking for any help really from there. Point of control to point of control. We'll see how this plays out on the reflection this afternoon. I'm not in a hurry to do anything in crude oil today. Here's gold. We had a bullish piercing pattern. We gave the downside auction a C-. The market has turned now to the upside, and we added 4,600 in open interest on higher volume yesterday. The market, the turnaround, the reversal is presenting as healthy as a new upside auction. Again, adding 4,600 in open interest. We're so far giving this new upside auction a B+. Excuse me. 1 second. My goodness. Little coffee for me. There we go. So volume and open interest were both healthy for upside auction continuation. Here's the 30-minute chart. We've opened with a gap. We talked about some sloppy upside structure that we were looking for this market to get to at some point. We reached one of them this morning. We still have a gap. We haven't closed that gap. We've got overnight longs, got another naked point of control, and another naked point of control before we get to weekly kickoff high. We can't close the gap relatively early. Gap rules state that we have to trade in the direction of the gap, which would have us looking for longs. Was this a pretty decent inventory adjustment? It looks like that's going to have to do for now because, again, it couldn't close the gap. Opening range was neither the high nor the low of the session here this morning. The opening range would have been a chop fest for us. Stay patient looking for opportunities. Look to buy weakness as long as we can't re-accept inside value from yesterday. Looking at the TPO chart yesterday, double distribution trend day, IB low of the regular trading hour session. Look where the overnight low traded to, the single TPOs. This is excess below price, excess below price. The market is doing a relatively good job in its upside auction. And again, we have no gap close here and lots of sloppy structure left above from the move on the way down. Okay, so looking for opportunities to buy weakness in this market. Look for structure to lean on to limit risk for longs in gold as long as we don't re-accept inside value from yesterday. That's going to be a game buster for longs if that is the case. Bullish engulfing pattern overlapping to higher range in the euro yesterday, adding 9,500 on that overlapping to higher range yesterday, albeit a downside move. Volume pretty good. Again, open interest adding 9,500. That's interest in this market. Here's the 30-minute chart. Where did that interest come in? Was it in the overnight or was it during the regular trading hours? It seems as though we actually probably trapped more shorts yesterday than we did add longs. Overnight inventory is deep to the long side. We've opened now with a gap. So again, if we can't close the gap relatively early, we're looking for opportunities to go long, looking for opportunities to buy weakness. Unless, again, we show acceptance inside the range or value from yesterday's session. Last week's high, we got a little gap that we left up there. We got a naked point of control up there. There are visuals for this market to seek to the upside. Whoops, what did I do here? Maybe this is it. Yes, we got another. This one was actually rechecked. So, lots of gaps, lots of late spikes as well. We got a late spike here in the 10-year as well. Added 27,000 in open interest yesterday. Still kind of a function of rollover. Volume is going to be blurry. Open interest is going to be blurry. Range bound for the last few days. Here's our late spike. We're opening below the late spike. That's rejection of higher pricing. But as range bound as we are, I'm looking at last week's low as one extreme and the Friday's high as another extreme. I'm going to be very cautious to do anything in between those two levels. Take a look at the TPO chart here. There's something going on. I'm okay. You guys all right? I'm not currently making waffles. Seems like we're okay here. I'm seeing everything looking okay. Let me know you can hear. You're all good there. Okay. Yes, Mike. March is full of risk. Beware the Ides of March. So here's our late spike in the 10-year, but again, opening below it, we're really range bound. I'm looking for opportunities at the extremes. All right, and we'll take one last look here at the natural gas. Okay, yeah, those were worried that you guys weren't seeing or hearing. So it seems like we're okay. Another bullish piercing pattern at the bottom here. With some continuation of the upside. We're wrestling with the weekly kickoff high here. This is going to be a pivotal level. One thing that concerns me a little bit about yesterday up to that level is we lost open interest and we lost volume. We lost about 2,300 in open interest. It's not healthy for an upside auction. We're seeing the market pull back off of that level now. Opened, not with a gap, but we're in range and we're in value now. So I'm going to try and stay patient. I don't want to jump in front of anything of this kind of magnitude. What we did do is we did not, or did we open in the late spike? So we had another late spike here. The base is $2.71. Oh, okay, yeah, I'm all right. I don't know what that's all about. I just got a little bit of a tickle here. So we did open in the late spike, but we're showing signs of rejection. We're going to have to see how this plays out. we've got an upside auction going. We haven't necessarily broken that upside auction. However, we had a late spike on Monday. We had a late spike yesterday. We opened below the late spike here yesterday, but we put in another one. We've opened in the late spike. It looks like we're just looking for opportunities to potentially look for longs lower. Not a whole bunch of excess down here, but we do have a gap, which kind of represents a degree of excess. I'm going to be really, kind of cautious here, looking for possible opportunities at the weekly kickoff level here. Last week's high also looks like an interesting spot for us. I may have to go further back to find any naked points of control here. Yeah, I will have to look further back for you, Caesar. This chart doesn't take me that far back, so all right. Now I think we're in good shape. All right, so some days things look really clear. I know that you all have days like that. Some days it's, well, I don't see anything great. Like I'm seeing in crude oil today. I don't see anything that clearly where price currently is. I've got a couple of levels that I would be looking for opportunities, but I don't see that there's anything right here. Our equities, we've got some issues here. We're going to be opening with a gap in the S&Ps, not in the NASDAQ. That's going to be a little bit confusing. Gold, looking for continuation to the upside. We've got the gap, so if we can't close that gap, that's going to be a good sign that we need to be looking for opportunities for longs. So just be careful. There's nothing wrong with not having a position. We're not going to make money, but we're not going to lose money. Make sure that you're looking for good opportunities. Make sure that you're playing your A game and that you're really in the moment and you're 100% involved and invested in what you're doing. Sometimes that's, that kind of leads us to a little over trading. Try not to do that, but it's a long day. It's a long week. It's a long month. It's a long career in trading. The less you lose, the more you stand to make. So be careful out there. Looking forward to seeing everybody for group coaching and Make Hope Money and the reflection at the end of the day. We'll see how this day plays out. And just stay centered, stay humble, stay grateful, stay creative. Look for those good opportunities. I'm going to take my deep breath now, which should be good if I'm not going to cough. Humble, grateful, creative, centered. Get out there and profit today. I'll see you for, again, group coaching, Make Hope Money, and the reflection at the end of the day. Get out there and profit. Have a great day. If there was some strange stuff that was going on with the feed today, I apologize. But we will see you very soon. Trade well. Get out there and manage risk.